Hi, this is Ben Jackson with the Illinois Bankers Association. Want to talk with you today about a few federal issues. Our content so far this year has mostly been focused on the state of Illinois and local issues because there's been so much going on in Springfield, but there's been a lot going on in Washington, D.C. as well. A couple items that are on the front burner for us include the tax reconciliation bill that was signed by the president a few weeks ago. This makes a lot of banking-friendly changes to tax and other related laws. We're very proud that something called the ACRE Act passed. This was originally created and championed by the Illinois Bankers and the Wisconsin Bankers Association. What this does, in its final version is signed by the president, permits banks to exclude from their gross income 25% of interest income derived from qualified rural real estate loans. So that is mostly agricultural loans for purchases or leaseholds. We'll have more detail out to you coming up at our ag conference coming up in August in Springfield, as well as through educational opportunities. Some other features of that tax bill include a permanent extension to the 20% pass-through deduction on Section 199A pass-through entities, and that includes Subchapter S banks. Now, there are a number of Subchapter S organized banks throughout Illinois, and we've long advocated for this permanent extension of that deduction rate of 20%. There's a number of other incentives for banks in the tax law, including a permanent extension of the new markets tax credit and other tax incentives. Another thing that's moving through Congress is a piece of legislation to address a problem we've seen widespread throughout Illinois, and that has to do with what we call trigger leads. H.R. 2808 is a House proposal in the U.S. House of Representatives that would amend the Fair Credit Reporting Act to limit the sale of consumer information when there's a credit check on an account. Oftentimes, what we're seeing in practice is Illinois banks, particularly smaller banks, will check on a customer's credit for a mortgage application or another line of credit, and then immediately that customer or potential customer is getting hit with calls and email marketing from other lenders regarding their credit worthiness. And some of those are unscrupulous. We've looked at various options to limit that, and H.R. 2808 does that. Now, it's passed the U.S. House of Representatives. A different version of this bill has passed the U.S. Senate as well. So we'll be asking our congressional delegation to reconcile those two versions and get that over to the White House. One other thing that we're focused on and we're asking for your help are fraud issues. Check fraud, wire fraud has been increasingly on the front burner for banks in terms of risk. So there is a call for comments from the federal banking agencies on this issue, and the IBA does plan to comment. Comments are due September 18th, and we're looking for your comments on this. So reach out to us, reach our GR or legal staff if you'd like to provide your perspective on check fraud and other fraud issues that you're experiencing in your bank. Thanks for listening, and we look forward to seeing you very soon.